In my last video, I explained why I believe we will most likely have some kind of a pullback. The video was called Inflation is Hot and Speculation is Taking Over, mainly from stocks like SoundHound.ai, which pulled back, and many different speculative names that have recently pulled back. But it's been getting extremely confusing because you have some Fed members that want to cut rates, you have some Fed members that don't want to cut rates, you have Fed members that want to hike rates, you have crude oil sitting at $86, and you have the S&P just keeps recovering from every single dip. And it's getting extremely confusing, and I feel bad. I mean, for macro investors, it's extremely hard. It's not as easy as it was in 2022. It was a little bit more predictable, a little bit more volatile. Now it's mainly all in one direction, and Fed members are confused. So it's getting extremely confusing. And this is why I love more fundamental investing, because I could focus on the company itself instead of trying to invest based off what the economy is doing and what the Fed's gonna do, which is extremely difficult. But I do try to have some kind of a view, macro view on the stock market or on the economy in general, so I can expect something that could potentially happen or have some kind of a cash position or some kind of a plan if we do have a pullback. And in this video, I'm going to update you on my thoughts on what I believe will most likely happen, in my opinion, and mainly what's happening right now, and talk a little bit more about pullbacks and what I try to do whenever the stock market reverses. Now, this is what crashed the market on Thursday. Was one of the Fed members claiming that there's a possibility that we're not even going to cut rates this year because inflation is still hot. On Friday, you had another Fed member saying, while not likely, it's possible the Fed may have to hike rates again to cool inflation. And you have Jerome Powell saying they will most likely cut rates 2 times in 2024. So it's getting a little bit confusing in terms of what's happening. And we had a massive dip on Thursday, and the stock market has, of course, somewhat recovered the next day. This is what happened. We're still down around 1% on the week. But I personally noticed on Twitter, on YouTube, in my own group from investor sentiment, that people are feeling the pain every time we have a red day. And this is because we got used to having so many green days. I mean, if you remember, since October of 2023, we've been nothing but going up. It's been so easy to buy. You buy a stock and it goes up, then you say, oh, I wish I bought more. You dollar cost average up instead of dollar cost averaging down. And this is not normal. It's not going to be like that forever. And I noticed people being hurt a lot on red days, commenting under Fed members, calling them names, just because we had a red day. But this is normal. We need to have red days to have sustainable green days. And this is something you have to have. But a lot of people have extremely high expectations. And I think this is normal, and we're just going to keep going up forever. And the honest truth is that this is not true. Now, something else that I see is just a very cool chart I would share, that we mainly tend to go down in April most of the time because April 15 in the United States is taxes, and people file for taxes, they sell some stock to pay taxes, and this is one of the reasons why the stock market has been a little bit weak lately. But in terms of us having a pullback or not, I've talked about it before, I'm going to talk about it again. It's all about if we're going to have a recession or not. I'm sure you've seen many posts around if we do have rate cuts, the stock market goes up, or if we have rate cuts, the stock market goes down, or if we have no rate cuts, the stock market goes down. Well, in my opinion, if we have no rate cuts in 2024, the stock market has to have a pullback, like a small pullback to price in that we're going to have rate cuts. So a small pullback, not anything crazy, not a 20% market crash, just a very small pullback. But in terms of later on, it will all depend on the recession. As you could see in this chart, the red line and the blue line is when we had a recession, and the rest is when we did not have a recession. So after the first rate cut, we tend to go up if we don't have a recession. But if we do have a recession, if we are in a recession, if companies are suffering in terms of earnings and the Fed is cutting rates, we tend to go down on the S&P 500, and most stocks just will decline in general. So it's all about if we're going to have a recession or not. And from me, I'm trying to look a lot at retail. And retail to me is very concerning. And, something like Gucci is facing a lot of, sales drops. Nike is also facing the same thing. Some LVMH brands are facing the same things. A lot of just luxury brands and regular brands in general. Even convenience stores are facing slowdown. Retail is facing, Costco is facing some kind of a slowdown. Even Olive Garden. I mean, this is a very cheap, affordable restaurant in the United States. And they even reported that households above $150,000 of income had more transactions, and the ones that are below $50,000 has way less transactions. Even though this is a very affordable restaurant in the United States, People below 50,000 of income are still feeling the pain, and they're feeling more pain, and they have a lot of credit card debt, student loans, and they just cannot do the things they used to do before, even something as basic as eating at an affordable place like Olive Garden. So for me, looking at all these things, looking at retail weakness, it's indicating to me that we're going to have some kind of a slowdown, some kind of potential recession later on. But the question is when. And this is why I look at the yield curve, which is a 10-year minus 3 months. And this has been accurate 100% of the time. Every time we went negative, even in the 90s, we did have a recession, the stock market crash. Same thing in 2000s, we went negative. After we went positive, you see the shaded area. We had a recession. After that, we had a stock market crash, and the Fed was cutting rate in the crash. Same thing in 2008. It dipped in 2006, 2007, late 2007, we went positive. After a few months from going positive, we had the 2008 recession, financial crisis, whatever you want to call it. The Fed was cutting rate, and the stock market was going down. Same thing happened before COVID, March 2020. Maybe it wasn't COVID was the trigger, but we did have a slowdown in the economy. And it's the same thing is happening right now. And we're far away from going positive on the yield curve. So for me, I'm just waiting for us to go positive before I try to, have some cash on the side, or before I try to do anything crazy or anything major. I've just been paying attention to everything. But once we go positive, this is when we should worry. This is when we should ask ourselves what will most likely happen next. And we are far away from that, which would tell me that if we do have some kind of a recession, some kind of a major crash, some kind of a major pullback, it will likely be in late 2024 to early 2025. From now till then, we could be flat, we could go down a little bit and price in no rate cuts if we do have no rate cuts. But I'm not seeing any major stock market crash on the horizon. Although many people are seeing it, I'm personally not seeing it. And for me, a stock market pullback or a stock market crash or whatever you want to call it is something that I hope for, is something that I wish for, because this creates the best buying opportunities to make amazing amount of money in the good times. Bad times are an opportunity to amplify your returns in the good times. And most people, they get upset after the market goes up. Like we bottomed in October 2023, and even in October 2022, we had a pullback, then we went up. After we went up, people said, oh, I should have bought more. I wish I bought more. I wish I did this. I wish I did that. Next time, we're going to go down on the S&P. I'm going to be buying all in. I'm going to do all these things. I'm going to buy these stocks and do all that stuff. Then when we start pulling back, they wait. They say, oh, but I'm not seeing any reason to be bullish. Therefore, we're going lower. And then we go lower. They say, oh, no, but we're going lower. Then they start finding an excuse not to buy because we're going lower. And then we bottom, we go up, and then they wish they bought more again. And this is something that just, it amazes me. And this is a video I did in October 29, 2023. It was near the bottom of the S&P 500. And if you remember back then, we had very bad sentiment. We had very bullish sentiment. It suddenly switched to bad sentiment. And we started going down. People start calling for the next 2008. This is normally mean we're close to a bottom on the S&P. We started going down. It was a lot of bearish videos. Even Tom Lee was somewhat bearish on the S&P. And I made this video. I said, retail investors are fearful when they should be greedy. And they were just fearful. And they were writing me in the comments. They say, I don't see any reasons to be bullish. I'm not seeing any reason to buy the S&P. But the truth is, we don't bottom whenever it makes sense. We don't bottom whenever everyone looks at the S&P and say, oh, this is a bottom, so we buy right now. No, it bottoms when everyone is selling. It bottoms when it's not easy to buy. The best time to buy is when it's not easy to buy. Whenever you're trying to find excuses not to buy, it doesn't make sense. This is normally the best time to buy. The worst time to buy is when it's easy to buy, like it's been recently over the last few weeks or few months. We just buy and it goes up. We buy and it goes up. You feel great. You feel better. This is not how it's supposed to be. And maybe, yes, it's some kind of a good buying opportunity. But the best ones is whenever we're going down, whenever everyone is fearful, they're trying to find excuses of why it's the next 2008 or why they shouldn't buy. And I learned all these things the hard way because I missed on a lot of pullbacks trying to find the perfect time to buy. So, the moral of the story is there's no perfect time to buy. It's not going to be so clear. It's not going to be so easy. If you find something at fair value going down, I would buy a small position, dollar cost average down. This is what I tend to do. And if we do have some kind of a pullback or a market crash or whatever we call it, I would say we go maybe 45, 4,600, but not this year. If we do have the recession and the stock market, goes down a little bit as the Fed is cutting rates, I would say maybe we could touch the trend line again, which we had since March 2020. And it's been a good indicator to buy the S&P 500 or many stocks once we got anywhere close to the trend headline. But this is, I mean, what people tend to do. Like, this is something on Google Trend. It says, should I sell my stocks? If you just put in, should I sell my stocks? It always spikes whenever the S&P is near the bottom. Mainly in March 2020, it spiked to 100. Should I sell my stocks? This should be asking, should I buy more stocks? Should I be trying to make more money right now? Should I do sort of things? Instead of, should I sell my stocks whenever the stock market is going down? And this was just my opinion on the whole S&P swing. I mean, I'm not seeing a crash anytime soon, but I could see some kind of a pullback. And many people got so used to green days that 1 or 2 red days is the biggest news in the world, and it's nothing. 1-2% declines are nothing. This is very normal, and we should have more of that stuff. And if we do have a crash, I'm not trying to, time the bottom or trying to find a reason to buy, because you're not going to do that. But this is just my opinion and just something I share with you guys on Sunday. So I hope you enjoyed the video. If you did, please press the like button and maybe consider subscribing. So I hope to see you in another video.